Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber.
Wednesday, June 22nd, 1:45 p.m. New York time. Part 2 of options, the education on options. So we're looking here on a desktop trading platform called Thinkorswim. And the underline, if you had listened to my first video, here we have SPY. It's a stock ETF. SPY is a stock ETF of the S&P 500. You could trade the stock as well. It has options listed on it. I mentioned that as well too. Here is the price, the last trade for SPY. So right now it's above $377 by 23 cents. Yep, it's moving pretty fast. It's a lot of activity today. Here is a link or a button tool. Click on it. Option chain. Yep, show me all the contracts currently available. So the nearest one to expiration is today. Expires today. In parentheses says 0. Go all the way down. And the furthest one out available right now, which would change, there add more. This one expires December 24, 912 trading days. There's a difference between business days and trading days. Understand that. And verify what your platform is showing you. Yep. So SPY, the SPY, bid the ask. If you don't know what those are, you should definitely learn. That's really important. Every financial instrument in the markets have those. So notice 377, 10 cents, 377. Well, they're changing. It's about a penny wide. Okay, it's moving real fast. About a penny wide. So let me show you another one. You know what this is? Tesla. Tango Sierra Lima Alpha, $719.20. Look at that. $719 was moving real fast. So here, it's about 30 cents wide. That's bad. Okay. Whatever stocks you trade currently or in the past, you should check and verify how wide they are, because that has an impact on the underlining. Let's get into the options now. The options. So when I say the underlining, look up here. So here, we're going to look at the first contract that expires today, the 22nd. Again, these numbers to the right is the year on this platform for 22 June. Open it up, and I'm showing 10 strikes. These are the strikes. I'm showing 10. I could change that and go to all. You're going to see all those, but let's just keep it to 10 for now. So the contract, 22 June. But I want to show you another one. So we're going to go all the way down to the last June contract. The last June contract expires the 30th of June, 8 trading days. Let's open that up. Excuse me. Apologize. What's the difference here? Well, one of the differences is the duration. This expires today, 0 DTE. This has 8 trading days. So options are made up of different mathematical Greek letters. Yep. So the point is time. You have more time on this side. So you're paying more for time. And just to let you know, on this side, we're looking at the call options. We'll go over that shortly, but I want to show you something that most people don't know and don't learn. Okay. So here, this column is delta. This column is delta. the underline is 377.40. So let's go to strike column, look for the nearest strike to the underline. So again, the underline is 377. So let's look for the nearest strike. 377, there it is. They go in $1 increments, $1 increments for this underline. And you all know why I say that in a moment. Now here, the 30th of June, again, 377. So 377 on the call side, 377 on the call side. And I mentioned that further out, there's different premiums. So the 377 here, if you buy the call option, when you buy something, you buy at the ask, 377, it's $125. Yeah, it says 1.28, 1.29, because these contracts represent 100 shares times 128 is $128. Okay, 377 strike. And the price for that contract right there. We'll go down here. This is the one that has 8 trading days left. And look at the 377 on the call side, $649. Oh, now you're aware there's a difference in price because the time frame, how far out till that contract expires. But these prices are moving. Well, why are they moving? Because when the underlying price moves, these move. So if this underlying price declines, go down, then these call options, these premiums, remember I said options have premiums, they decline. If this price declines, we're on the inverse, the puts, these premiums go higher. Yeah, that's a lot of information, overload. Well, we're sticking to one side for now. The other thing is here, looking at 377, we're looking under the column delta. So 377, we go over to the delta, 377 delta is 56. We'll go to the contract that expires in 8 days. And here, the delta is 52. Why are the deltas different? Well, again, there's different time frames on them. Different. Yeah. Don't get discouraged. Baby steps, you'll get there. Okay. Remember I said the difference here between here, the bid and the ask, about 1 penny wide. Well, let's look here on the 377. 377, the bid and the ask, about 1 to 2 penny wide. Let's look here on the 377, about 1 to 2 penny wide. Very nice, very nice. That's good. Let's queue up Tesla, TSLA. It's queued in. Let's open up the current contract and the one that expires the last day. Wow. Okay, it's not here. Let's look at the nearest. That's 9 days, the nearest. Yeah, different underlines have different contracts. Not all options have weeklies. Okay, same thing. We already determined the bid and the ask here. We're going to say it's about, I say about 30 cents different, 30 cents, 10 cents, it varies. But anyway, it's a wider spread. It's more than 1 penny wide. The underlying 720. Let's look for the contract. 720. Let's look here on the bid and ask. Look at that. 1755. That is $1,755. And if you want to buy it, the ask, $1,780. Yep, that's how much the contract costs. $1,777. Look at the difference. The difference is about, was that $30 difference? So that's wide. That's bad. That's bad. It happens. It's not a good one to trade. Yep, you might like it. Okay, you do that. There's a disadvantage. I'll get to that later. Okay, that was the 720. Let's go down here, 720. Remember I said the further out the contract, there's more time it is. So the 720, if you want to buy that contract right now, the strike 720, again, strike 720, the contract 1 July, 720, it costs $3,310. Again, don't question me. Yeah, I know that says pennies, 30 or $32.95, multiply by 100. Check and verify, call a CBO, ask how many shares in one contract. It's 100 shares for these main contracts. If it's less than 100 shares, say different, but it says right there 100. So again, yeah, that's a lot of capital. That's a lot of capital. Again, you're spending more money, but you have more time. Okay, let's put back the SPY. SPY, the S&P 500. Running out of time. Let's get done with this thing. Okay, let's close this. Close this. SPY 376. So again, closest one, 377. $103. That contract costs 377, $629. And look, it's tight, it's only a few pennies. And the other thing I forgot to show you, oops. So again, these strikes are $1 intervals. Let's queue up Tesla. There's a lot of information. We're going to focus on the strikes. Look at these. These are $5 increments and 2.5. But let's better yet, stick to the S&P 500. The S&P 500. So you understand something about increments. S&P 500, the stock ETF, the increments are 1 point, $1 wide. That's good. I like those. SPX, what did I tell you the SPX is? I said it's the cash index. It's a larger product than the SPY, several times larger. They go in $5 increments, $5 increments. See the prices here too? $5 increments. So when it goes from 1600, let's put the ES now. Again, $5 wide increments in the strikes. The ES, which is the S&P 500 futures, queues up. We're opening it up. There it is. They also are $5 increment in strikes. Yep. So there's not 1 point wide. You only have those choices. And also it's a higher price thing. But let's put back that underline SPY. So we're almost out of time. Yep. Just warming off. Again, baby steps. I don't want to sit here for 20 minutes or an hour to give you all the information that you're not going to retain, most likely at one time. Okay. So let's do this again. Middle column are strikes, bid and ask, and we'll go back here. Open interest. Open interest. All the contracts that have traded since the initial contract got created. So I want to show you something further out. Right there, June 30th. June 30th, these contracts expire. And the underline 377, and this is the SPY, 377. Today, this volume column represents today. When the market closes, this gets updated. This volume column gets updated throughout the day. This open interest gets updated at the end of the day. So 377 strike on the call side, 2,316 contracts were traded today. It says open interest 0. Yeah, since this contract's been available, there's been no trades on it, but a huge lot today, a huge amount. So what's that telling you? Well, let's go on this side now, the put side, 377, open interest 0, but a lot of things, a lot of traded. Yeah, so there's more that were traded here on the call side and the put side. Don't think just that number alone tells you it's bullish or bearish, okay? Use caution. There'll be more training. Stay tuned. Many thanks for watching.